Hey guys, Mike here. This video is all about RSI for beginners, and this will completely change the way that you ever look at the markets again. Because for me, RSI gives me a competitive edge to put the odds in my favor on every trade. If you're investing in cryptocurrency or the stock market, whether it's day trading or long-term investing, stick with me till the end of the video. This will forever change the way that you enter or exit a trade. We'll go into what RSI is, how I use it, and how it will completely change your trading forever. It's super easy to understand and you don't need to calculate anything, so let's get better. All right, so this part is super important, and I want to get this out of the way just so you understand things before we dive into the chart. So RSI is a momentum indicator, and it measures the magnitude of recent price changes to figure out whether a stock is overbought or oversold. And I like to imagine this like bulls and bears, and this kind of gives you a sense of, who's running out of steam. If bulls just keep pushing and pushing and the price keeps going up every candle and it just keeps rising, bulls are going to run out of steam. They're going to run out of energy, and it's going to be time for a pullback where bears take control. And this is where we see RSI above 70. And this is considered as overbought or overvalued. And the opposite is true where, let's say there's a whole bunch of red candles and the price just keeps dropping and dropping and dropping really quickly. You'll see that RSI gets below 30, and this is considered as oversold or undervalued. And I have my own trading rules where I don't enter a trade bullish if RSI is above 70, and I won't enter a trade that's bearish if RSI is below 30. And that's because statistically, the probability is higher that a stock is going to pull back when the RSI is above 70, and the odds of entering favor risk more than it does reward, so why would I enter? On the other hand, when RSI is below 30, the odds favor a bounce. So I won't enter a trade that's bearish when we are in oversold conditions. And this is my personal rule and guidelines that I have set for myself, and there's plenty of times where I miss out on huge moves because of this, but that's okay. There's plenty of opportunities in the market, and I'm not going to capture every single one, and that's okay. I'm not trying to get rich quick. I'm trying to make consistent gains and be profitable and beat the market on a regular basis. So statistically, it is true that we are going to pull back when we are in the 70s or higher, and we likely will bounce when we're in the 30s. And over the long term, I want the odds in my favor, so this is kind of what I do, and you can implement this your own way. And there are exceptions to this rule, specifically when a stock is in all-time high territory or at all-time lows. And when that's the case, RSI pretty much goes out the window, and you have to gauge other things and other indicators and skills that you need to develop to figure out when to enter or exit. So let's go into RSI, and first off, the way to add it is you go into indicators and you look for RSI, and it will be there. Once you click it, it will add this little graph at the bottom of your chart. And on this chart, you'll see there's a dotted line at 30 and a dotted line at 70. So when it's above 70, it's overbought. When it's below 30, it's oversold. And the line that you see indicates whether something is oversold or overbought at the close of that candlestick or in real time where it is in this given moment. And generally RSI is set to RSI 14. So it pretty much uses the previous 13 candles plus the current candle. So that's 14 candlesticks that it takes into consideration to determine RSI. When you have a lot of candles, dropping really quickly, that's when you get oversold. And this is where you can look for entries. And the value of RSI will always be between 0 and 100. It will never go above, it'll never go below. And when something gets really close to 100 or really close to 0, you know that it's at an extreme and it could have a potential to bounce. And another thing to consider is that this is using whatever time frame that you're on. So if you're on the daily chart, it's going to take the previous 14 days of candlesticks to determine your RSI. If you're on the 1 minute chart, it's going to use the previous 14 minutes to determine your RSI. So this is applicable on all different time frames for day traders, swing traders, and long-term investing, where day traders can use, the 1 minute, 5 minute, 15 minute, hourly. Swing traders can use the, 15 minute, hourly, daily, weekly, and long-term traders can use the daily, weekly, monthly. And I'd highly recommend checking out my TradingView tutorial video, which kind of goes through how I'd set up my chart and also how to navigate yourself around TradingView if you don't know how to use it. All right, so we're going to go through Facebook on the daily chart to see where some oversold and overbought conditions were and how price acted before and after that and what led up to it to try to understand what RSI tells us. And as I'm going through this, I would highly recommend going through your own chart that you want to trade and see how the price and RSI act with each other, and maybe this can help you get a better entry or exit in the future. We're going to look at Facebook let's look from probably 2019 to 2021, and we are going to have the extreme of the COVID stuff happening, so we'll go through that as well. So we can see that we had oversold conditions here, 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 and here. So those were the four times in the past 2 years where on the daily time frame we had daily oversold conditions. So let's see where they line up with price. So that's there, 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 and there. So you can see that this has marked relative bottoms of price action. We had a bounce, over here we had a bounce, and over here we had a bounce. You can see that when the daily chart gets oversold on the RSI, it is potentially time for a bounce. And why is that? So we can see that when we got oversold over here, we had significant pullback. So it takes into account the previous 14 candles, and it looks kind of at the average of the amount of drop versus the green candles of the average amount of up. The difference between that and kind of the ratios between it, it's saying that we've dropped a lot relative to how much we've gone up in the previous 14 candles. And it's saying that, you know, people may have sold a little bit too quickly and we might be due for a bounce or a little bit of a correction in price, where it kind of means that, you know, the market is pessimistic about the outlook, and, you know, there might be fear in the streets, and when there's fear, that's when there's also opportunity. So let's zoom out and look at when we got overbought. So we got overbought over here, 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 and here. So we can see we had a top there, 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 and that lines up with that one, and that went out of our chart up here. So you can see that it has helped mark tops. So it can help you determine when to exit or enter some short positions. RSI, you know, when it's oversold or below 30, it might be primed for a trend reversal, or a correction in price in the opposite direction. But it doesn't mean that it will. It just suggests that, you know, bulls or bears might be running out of steam. And this can be a signal of, hey, let me open my eyes and look for opportunity, because we're in kind of optimal conditions to be looking for something with good risk to reward ratios. You need to be looking for where's my support, where's my resistance, or using other indicators or strategies or reasons to enter. But this is kind of like the opening criteria of like, hey, doors are open. This one might be something good that we want to get into. And just because RSI is below 30 does not mean that we should be blindly buying, because there's plenty of times where RSI gets to 30, but we end up dropping further and further. And you can end up being in a position where you're trying to catch a falling knife and it just keeps falling. This is a buy signal, but it should never be used as the sole reason for an entry, because even if the RSI is 30, it doesn't mean that the stock or cryptocurrency won't continue going down. So it just kind of helps you get a sense of the temperature of the market to see, you know, how things are in the current moment. And in my experience, when markets are in long-term uptrends, and generally they stay in uptrends, we don't stay oversold for very long, but we may stay overbought for an extended period of time. And the opposite is also true. If we're in a long-term downtrend, we won't stay overbought for very long, but we may stay oversold for very long. And don't take my word for this. Open up a chart and open up TradingView, type in your ticker, and see how it has reacted with RSI and how it has maybe marked tops or bottoms, and how you can use this. And check out the different time frames on the hourly, the daily, the weekly, depending on what type of trading you want to do, and see how it lines up and how this can really help you make better entries, make better exits, and be a more profitable and consistent trader or investor. You can use this as a criteria of, hey, I'm open, I'm listening, I'm interested in potentially making an entry. Let me figure out some other reasons why I should enter and where my support, resistance, exit, stop loss, whatever are. So let's summarize what we talked about. RSI is a measure of momentum in the markets, and you can use this to provide a reason to look for an entry below 30 or look for an exit above 70. And RSI is very valid for the stock market and for cryptocurrency. So if you want to use this for Bitcoin, Dogecoin, whatever the hell it is, go go for it. RSI can really help capture moves for day trading, swing trading, and long-term investing. So this is something that you should think about when you want to enter long-term entries in your retirement account. Very good entries if you just have some money sitting around is, hey, the S&P 500 is oversold on the daily or weekly time frame. Let's make an entry. Like these are the best opportunities when there's extreme fear in the markets, have been consistently the best entries over the long term. So sleep on it, backtest this with your own information and your own data, and see if it works for you. Let me know in the comments below if you could have used RSI to make better entries or exits, or you can tell me I'm an idiot and that works too. If you learned something out of this video, drop me a like, hit the subscribe button, and check out my videos on how to use TradingView or how to read candlestick charts, and I'll link them right after my face disappears now.